NIO enters the new trading week with a question on everyone's mind. Can it hold above $6? After months of struggling to stay above 5, NIO not only broke through that barrier last week, it crushed it. By Friday's close, the stock finished at $6.34, up 81 cents on the day, a rally of nearly 15%. At one point, it touched an intraday high of $6.58, and to cap it off, it even added another 11 cents in the aftermarket. That wasn't just a good day, it was the culmination of a breakout week that saw NIO post 4 consecutive closes above the $5 level, something it hadn't managed in over 6 months. The momentum is undeniable. Investors who had written NIO off as just another struggling EV maker are suddenly paying attention again. Bulls who stuck it out feel vindicated. Traders are circling, intrigued by the volatility and the chart shift. But as we head into a fresh week, the focus now shifts from the victory of breaking out to the challenge of consolidation. Can NIO defend $6 as a new floor, or will profit-taking and macro headwinds drag it back under? To understand where we're heading, let's briefly revisit what made last week such a turning point. On the macro side, the big story was Jerome Powell's speech at the Jackson Hole Symposium. After months of hawkish policy, Powell signaled that the Federal Reserve is prepared to cut interest rates as early as September. That was music to the ears of growth investors. Lower borrowing costs make it easier for companies like NIO to finance operations and expansion, and they also make investors more comfortable betting on long-term growth stories. Treasury yields fell, the dollar softened, and risk appetite surged. Growth stocks, and EV names in particular, were immediate beneficiaries. On the company side, NIO had plenty of positive developments to amplify that macro tailwind. The unveiling of its updated ES8 SUV reminded the market that NIO is still competing in the premium EV space. This 3-row SUV, one of the largest pure electric SUVs in China, is priced competitively against Tesla's Model Y, particularly under NIO's Battery as a Service plan, which brings the effective cost down to around $43,000. It's a strong statement that NIO can still play in the premium league. Then there's the Onvo L90, NIO's big swing into the mass market. Analysts are forecasting that the L90 could generate up to 10,000 sales per month by the fourth quarter. With NIO's current monthly deliveries sitting between 20 and 30,000, that would be a massive boost to volumes. If those projections materialize, the Onvo becomes a real growth driver, not just a headline. Layer on CEO William Li's message that NIO is entering a harvest period, and suddenly the narrative feels different. For years, NIO was seen as a company burning cash with no clear payoff. Now the message is that the heavy investment in battery swap infrastructure, R&D, and branding is starting to bear fruit. Whether or not that's fully true, it's a message the market wanted to hear. Finally, there's the technical and psychological element. The $5 mark had been a hard ceiling for NIO for months. Every time it broke through, sellers swarmed. Last week changed that. 4 straight closes above 5 turned resistance into support, shifting how traders and algorithms view the stock. Short sellers who had grown comfortable betting against NIO suddenly found themselves squeezed, forced to buy back shares to cover positions. That short covering added more fuel to the rally. So here we are, with NIO closing last week above $6. The question is whether it can stay there. 6 is more than just another round number. It's a psychological milestone, a point of reference that will shape trading in the days ahead. If NIO can consolidate above 6, it confirms that the breakout has legs. It tells the market that the rally wasn't just a short covering spike or a one-off macro reaction. It sets the stage for testing higher resistance levels, first at 650 and then at 7. That opens the door to a more sustained uptrend, one that could carry the stock into territory it hasn't seen in months. But if NIO slips back below 6 quickly, the risk is that it looks like a false breakout. Profit-taking is a natural concern after such a big weekly move. Traders who bought under 5 may be tempted to lock in gains. If volume fades and the stock drifts lower, it could give shorts an opening to reassert themselves. That's why this week is so important. It's about proving that 6 isn't just a peak but a platform. The factors that will determine whether NIO can hold the line are both technical and fundamental. $6 is the immediate level of interest, with $5.50 as the next layer of support if it slips. On the upside, $6.50 is the first real resistance, followed by 7. Traders will be watching these levels closely, and volume will be the tell. Strong volume on a move higher suggests conviction. Weak volume suggests fragility. Beyond the chart, Investors are hungry for updates on ES8 pre-orders and Onvo traction. If NIO can provide any evidence that the buzz is translating into real demand, it will go a long way towards sustaining momentum. Delivery numbers, guidance, or even positive commentary from management could give the stock another boost. The broader EV sector will also play a role. Tesla, BYD, XPeng, and Li Auto all serve as benchmarks. If the sector as a whole continues to rally, NIO can ride that wave. If competitors falter, it could drag sentiment down across the board. And of course, the macro picture still looms large. Powell's dovish tone sparked last week's rally, but markets remain sensitive to any shifts in Fed commentary or economic data. Inflation prints, jobs numbers, or geopolitical developments could all move sentiment quickly. For a stock like NIO, tied closely to both growth expectations and Chinese demand, those shifts matter. Beyond the immediate trading levels, this week also matters for what it says about NIO's place in the EV race. Tesla and BYD are still the giants. Tesla dominates globally with scale, profitability, and brand power. BYD is the juggernaut of China, pumping out vehicles at a scale NIO can't match. But NIO isn't trying to be Tesla or BYD. It's carving out its own space, with a blend of premium offerings, a mass market push, and unique infrastructure like battery swapping. Last week proved that the market hasn't forgotten that story. It reminded investors that NIO still has a strategy, still has products, and still has the potential to surprise. Whether or not it can translate that into long-term success is another question, but for now, the conversation has shifted. Instead of asking whether NIO will survive, people are asking how high it can go. So as we head into the new week, the test is clear: can NIO hold 6? If it can, the breakout story gains credibility, technicals turn even more bullish, and momentum could carry it towards 7. If it can't, then the risk is that the breakout fizzles, leaving investors questioning whether last week was just a sugar rush. The good news for bulls is that the tailwinds are real. Powell's pivot is a game changer for growth stocks. The ES8 and Onvo give NIO fresh product stories to tell. Analysts are turning more optimistic. And short sellers have been shaken. That's a powerful combination, one that could keep the rally alive if execution and demand follow through. For traders, the levels are clear. For long-term investors, the story is improving. And for everyone watching, this week will be a pivotal test. NIO has broken out. Now it needs to prove it can hold the line.